APDN, ITCI.
Does anyone have any questions? Okay, so it's 11 o'clock. I'm going to go ahead and talk about some basic. All right, we are now going to get into shorting lesson, some of the basics. Okay, so I want to make sure you guys are listening in, and then maybe you can, jot down some notes on some of the things that I'm going to be talking about. So once again, we do have people in here that do short, but I just don't think a lot of you, because we've been having a lot of newcomers. So I think one thing that you guys really need to understand is that shorting is as popular as people go along. Okay, it's a trading technique. Okay, for a lot of traders and also investors that are willing to, take on potentially substantial risk of capital loss, right? Obviously, just like in anything. And shorting stock is, short selling. You probably heard of it as short selling or, just shorting stock. And it's just basically involving the sale of a stock that the seller does not own. Okay, or should I say like shares that the seller has taken on loan from a broker. So that's why I said I want to see your broker if it has availability for the shares for you to borrow. So you're basically borrowing or taking a loan from your broker. Does that make sense? So there will be an area where you're going to have to request on your broker, hey, I want to go ahead and short, let's say, EYEN. Okay. So at the end, you're going to have to go to the settings on your broker, or there's maybe certain brokers might require you to call them, which I don't think that's, the case anymore. I mean, most people should be able to just freely access from your broker and then just look at the price of the shares. There's a cost to borrowing shares from your broker. Does that make sense? So you're borrowing shares, okay, and then you'll check the price. So let's say if you want to borrow 1,000 shares to short EYEN, it will tell you the price. Let's say it's $38 for 1,000 shares. So okay, you're like, okay, if you think that this is going to be worth it because you see that the stock is going 20%, and you'll make that back and more, then you'll go ahead and click that, and you'll now have 1,000 shares for the day. Basically, you're borrowing from somebody, from your broker, and the broker locates those shares from another investor or people that have the money or the shares that they're really ready to give to them, and the base commission basis. Okay, so you're borrowing the shares, and you're basically what we call covering when the stock does go down. Meaning covering is basically you're just buying back those shares. So traders may also sell other securities to short. It's not just stocks, right? It's also, you've heard of options. There are also option short selling, right? First, understand the motivation to sell short. Okay, some of you guys are like, well, what's the point of shorting, Mr. Ryan? I mean, I don't really see it. Well, first things first, short sellers take on these transactions because they believe a stock's price is headed downward. So when they see the stock is its peaks, reaching its peak, and it's done, it's probably going to be coming back on down, then they're going to look to short. And that if they sell the stock today, they'll be able to buy it back at a lower price before closing or whatever, depending on your time frame as a trader. That's what it is in the near future, or So if you accomplish and consisting of the difference between your sell and your buy prices. So some traders don't short sell purely for speculation, okay? Or they do short selling purely for speculation, and others are gonna obviously want to, like hedge or protect their downside risk if they have a option. So in other words, if they already own shares of the same or a related stock outright. Does that make sense? So hedging is basically, obviously, you guys know how that works, right? Sometimes you might have two accounts, and one you're going long, and then you're like, oh crap, this is getting shorted, so you're gonna get your other positions going along, so you'll probably cover that difference, and then you'll make sure that you protect yourself from making sure that you don't just completely blow on the wrong end side. Now let's talk about some examples here. So let's say you are shorting say a stock, we'll just call it ABC. Okay. Let's say if the stock usually is grossly overvalued. Okay, this ABC stock is really overvalued, and the stock's going to crash sometime soon. Overvalued, or should we say overbought, right, on the other side. So you're like, okay, well, this is really overbought. We need to see the stock coming back on down. So you believe this very strongly that you decide to, say, borrow 10 shares ABC stock from a broker, okay? And then you sell the shares with the hope that you can later repurchase them at a lower price, okay? So what you do is you are looking to first borrow the 10 shares of ABC stock, and then you sell the shares with the hope that you can later repurchase them at a lower price, because that's what you want to do to make money in shorting, and then you return them to the broker, and then you pocket the difference, okay? So you proceed to sell the 10 borrowed shares, say at $50 each. So you're pocketing what? $500. Yes, in reality, you would pay a small commission, and then depending upon timing, you might also have to pay, well, this is not the most cases scenarios, but you have to probably pay the dividends to the buyer of your shares. But these are obviously omitted in the this example that I'm giving for simplicity wise. So the point is, you now have, say, $500 in cash and have an obligation at some point, okay, in the near future to purchase and return the 10 shares of the ABC stock. So if the stock goes up above that $50 price, will you make money or lose money? If the stock goes up above the $50 price, will you lose money or will you win money? You'll lose money, right? Because, thank you for responding, because you'll have to pay a higher price to repurchase the shares and return them to the broker's account. So, for example, if that stock, ABC, went to $250 per share, you'd have to spend $2,500 or $2,500 to buy back the 10 shares you owe the brokers. Does that make sense? So you still keep the original $500, so your net loss would be $2,000. On the other hand, if the company happens to go bankrupt or something, right, for example, then the stock will be delisted and you can buy back for a few pennies per share, most likely, and pocket almost all of the earlier shares proceeds as profit. Okay, so that's why kind of would look to short stocks. Okay. Now you have to also understand, just like anything in this world and anything that you do, you have risks, and you have to be aware of the risks involved with short selling. Okay, so when you short a stock, you're basically exposed to large financial risk. And so in some cases where we have, traders, investors, they see a stock that has a large short interest, meaning, you guys probably heard, oh, hey, EYEN or maybe whatever XYZ has a large short interest. What does that mean? It means a big percentage of its available shares have been shorted. And so they attempt to drive up the stock price. So how do we know what to look for? How much, shares, what's a short float on, say, EYEN? We will go to finviz.com. We pull it up here, right on the screen, EYEN. Okay. So in this case, we know that EYEN, this is shares float, short float. So this is 0.86%, not too high. Okay. Let's say, for example, KODK. A lot higher, right? 6.55%, right? So obviously this is more influenced for what? Shorting, because what do you think? Because the company obviously came out with that news about, that big loan that they first announced is currently on what? On hold or something right now, right? So anyways, so that's what it is, okay? So you want to see the short percentage are in the law for interest or not, okay? And then, and the reason why that's important is because you want to see if you ever, sometimes when the stock gets so beat, you want to also see a potential short squeeze. Okay, so that can also force short to cover. Okay, when you see the buyers come back in or buy back the shares before the prices goes too high, and then that exerts a certain amount of control over the stock price before a large amount of speculation causes huge losses. Okay, so if you want to sell short stock or stock short, can't assume you'll always be able to repurchase it at whenever you want at a price you want. Okay, so the market for a given stock has to be there. Okay, if no one is selling the stock, or there are many buyers, including like these panic buyers caused by other short sellers attempting to close out their position as they lose more money, you're probably going to be in a position to incur serious losses. And so you could also wake up to an announcement that a company is getting acquired for a, say, like 40% premium over its current stock price, including, say, a special dividend, but that's not important right now. So, for example, which means that, if, let's say, short sellers are instantly impacted, right, they're going to be instantly impacted, right, and they're going to have some serious losses. So you have to understand the stock price is most likely going to be volatile, and you cannot ever assume that for a stock to go from price A to price C, it has to go to price A. You may or may not have the opportunity to buy or sell on the way up or down. So prices, you have to assume that prices will probably may instantaneously reset with the bid or ask prices jumping higher very quickly. So the risk of losses on a short sale is going to be what? Or infinite. Are the risk of losses on a short sale infinite or limited, folks? I'm asking you guys right now to see if you're paying attention. Infinite or limited, right? There you go. Correct. Infinite. That's why there are shorting, because it's more riskier, in fact, because the risk of losses are in short selling is infinite in theory, because the stock price could continue to rise with no limit. So what happened with people on KLDK? You guys remember KLDK blowing up, right? KLDK, we had a lot of shorts. Otherwise, their accounts got blown. They had a margin call. They had to give the brokers, they owe the money. Huge risk, right? While the other buyers, on the other hand, were riding it up, and they made millions, or depending on whatever shares you went, they made a lot of money. Okay. So that's pretty much the idea of the short selling and the risks of it. And so the short selling tactic is best used by seasoned traders who know and understand the risks. That's why I haven't been really talking about the short as much. What you need to do right now in the beginning of the first 3 months is to understand how the bulls think. Get yourself the very basics, like understanding the risk management, right? Meaning going in with a trading plan. What are my risks and what are my rewards? So risk to reward ratio. You need to keep practicing that. Understand this on ongoing long. You can do the same thing on going short. Like I give you guys an example earlier on this OXVR play where I said you can look to short at 205. Why? What was the reasoning? Because that was where the VWAP was. Obviously the timing wasn't that great, but the VWAP did break out on OXVR, and then it got squeezed. Then, just like anything on going long, you need to have a stop loss. In this case, you want to protect yourself from the stock going up higher, because then your losses are going to be great. So we had a 220 stop because that was a previous area. That 219 area was a rejection, so we wanted to give a one set above that. Just like, 5 first, we start going down and you see that support holding, you want to make sure you place a stop below that area, okay, to ensure that the stock will, either hold a support or the stock is going to crack, then you should be getting out, right? Because if it support cracks, is the stock going to go up more or down? The stock's going to go down more, most likely, right? So you have to understand that shorting a stock is subject to its own rule, okay? For example, you cannot short most of these companies or brokers, like say, E-Trade, TD Ameritrade, these big U.S. companies, they're not going to let you short penny stocks. That is why you're going to have to open up a TradeZero account or a CME account, or I believe Lightspeed does very great shares to borrow, right? So that means that these companies or these brokers, are going to have more availability to let you borrow these shares, okay? So like stocks are, the brokers like E-Trade and TD Ameritrade and these, big U.S., whatever, all that, they will only offer you so many shares to borrow. Or they're more likely going to be on more blue chip stocks, right? More well-known stocks. And the stocks that we don't know, like these stocks, penny stocks or lower price stocks, they're not going to be able to give you, for many reasons. One, it could be because, their clients, the people that are clients of the platform, that they're not going to take unnecessary risks than they should, and or it could be just a U.S. thing where most brokers, how with the SEC and all that, so even then we have already strict rules above 25,000, not can't trade, right? Otherwise, elsewhere, like outside the United States, you can not have to worry about that, but. So anyways, these are just small little introduction to, your short, selling. Did this help you guys learn better on short? For those that are new, maybe you guys have already known about shorting. Now I want to kind of a little bit talk about, in the next 10 more minutes or 15, a little bit about, okay, so now that you understand what shorting is, right? What can I do now next to, some of the strategies. So OXVR, if you shorted at 250, was that a good short so far? Yes, it was. All right, it got a little fake out. So we've seen a lot of fake outs already in the morning. So what you could do is, instead of trying to go long and force yourself from losing more money, what you can do is borrow the shares, check out how much shares it even has available. And if you do, check the price. Sometimes the price might be ridiculous. So you look at the stock and you notice the stock is constantly downtrending, right? So you just keep on riding on down. You're making good money. Even the people that got it from the 210, you're still looking like it's going to be going down. But obviously we had to stop, so that's not going to work out. But the next talk about is, again, how I started to look for finding shorts, okay? So I first started out with this book, William O'Neill's book, How to Make Money Selling Short Stocks. Anyone read that book before? Has anybody read William O'Neill's book, How to Make Money Selling Short Stocks? Well, if you haven't, I recommend it on Google Drive, How to Make Money Selling Stocks by William O'Neill. This guy is where I first started to kind of first pick up on the idea of, shorting stocks. From the books that I learned from was coming from that book. So I definitely recommend reading it to get a better idea of how to do this correctly, right? So I've taken the basic idea from that book and adapted a bit to my own tastes, right? Basically to making it a little bit more short-term strategy. So the idea that this author O'Neill writes about is shorting stocks on weak rallies, during, like, say, bear markets right now, or even during, slower months like August and September, rather than, strong breakdown. So the main reason that this author talked about that, is it has a, natural inclination to go up, right? And that's why it's important to understand and how to learn how to short, because you want to be ready for when the market does have a natural inclination to go down, right? And are we seeing right now this month, seeing a lot of stocks more natural inclination right now? So far, it's been more on the downside, okay? So stocks that suffer major, these fake outs and these major breakdowns below support will usually have, obviously buyers coming in thinking that the former leader is now this bargain, right? And so that the breakdowns aren't significant or that the stock isn't going much lower, it just means that the shorting breakdowns will often get you caught in a quick, this bear market what he calls a counter rally that will get you stopped out. Okay, so you have to kind of play around with this and then see how this works out for you. Again, obviously, I don't recommend a real account first. Get on your demo account, start virtually practicing, simulate yourself. And the guy talks about how, the bear market rallies can be very short and very powerful, right? You can see here right now on, say, for example, OXBR. This is a great, we saw. I mean, does this make sense? This is a very easy play, actually, because OXBR, all you're doing is, buying, you're basically shorting again once it cracked, got an upper wick here at 220, short all the way down as long as it's making lower highs. You could be literally scalping as you cover it down at the bottom here before the reversal here again, short here at the the downtrend line, short back down, covering here again at the bottom. Then you buy, the buyers come back in, so you cover here the rest, and buyers take it up. You don't short. In this case, we got squeezed out here, we got stopped out here, and then this was another great entry for short, upper wick here at 250, and then we should short down. The same thing that happened here. And now we're looking to see if this area here becomes another squeeze on up, back up towards the VWAP. So people that, look to buy at 190, they're looking to take it up to 210. Maybe the bears might be coming back in here again or not, whatnot. So we'll see. But the bear rallies are, market rallies are really, really powerful. Usually by some sort of short squeezing, right? So we saw that happening on KODK, got a huge major short squeeze. So that's a huge amount of money that a lot of the buyers made on the upside. So there are many people who make a lot of money shorting breakdowns, the same as buying stocks on breakouts, the author was saying. So I think watching peak volume rallies back into points of resistance is a much less risky way to establish short positions. So the author keeps talking about, how that timing, obviously, just like anything that we do here, is extremely important, especially when it comes to shorting, because when big leaders from the prior bull run, which are the actually exact stocks you should be looking to short at. So that's why, for example, if you are having trouble to which stocks to look at to short, you want to look at and focus on the former big leaders from the prior bull run, right? You want to look for the ones also that ran up very. What happens? Most brokers, most stocks that ran up very nicely, like say on EYEN, are going to eventually get shorted. The number one gainers, the number one big run-ups in pre-market. Who was it? EYEN. This was a great play. I mean, wasn't this? The guys that bought in, we rode on up. We got a bull flag right here. EYEN just did absolutely nothing but very nice dragon. The buyers, the bulls ate up here. Where did the shorts come in? Once the trend line cracked. So this was a great short for the bears. So this is obviously right now, who do you think made more money? The buyers on the way up? I mean, it's about the same. That's what the author is saying, whether it's on the breakouts or the breakdowns. And you can see here that this isn't uncommon. You will see a lot of stocks doing this. It's not just August month or anything. We're just showing a lot of stocks just getting beat down. So look at this, from 850, and the stocks just kept continuing to go down towards this $5 mark. So the lowest point we got to was 507. The stock will eventually break out of this triangle that it's setting up for potentially, because we're looking for that 1140 breakout time. Okay, so we are looking to see if EYEN here is going to break out. That's why I like this 525 area. Obviously, right now we still need some more volume, but this is the general idea that we want to break out of and then see this thing. We still have some bears lying around here on EYEN, and they're gonna get caught out by surprise. We want to trap somebody, multiple ones, and then get this short squeeze nice back up to $6. That's why you see a lot of times in power hour or after hours, you see the stocks just absolutely getting squeezed out. Some of you guys don't understand this concept, so you guys are like scratching your heads. How did the stock go up? There's no new news. It's just the concept of the shorts getting trapped and short squeeze, and the stock runs on up very, very nicely. Okay, so going back to what I was talking about, what was I saying? I was talking about the timing, right? So obviously the author, I remember he was talking about how this is very important, and that the what stocks to look for shorts, the prior bull run, the big leaders. After that, you want to short that down. and people make the similar amount of money on the huge run breakouts versus also on the way down. However, there were no doubt that many people that missed the big runs in certain stocks, and the regret that goes with missing out on a stock causes them to look for chances to still get into the stock, basically hoping, right, to catch some of its run. So the first few times a big time stock breaks down, there will likely be buyers below preventing it from totally crashing, right? Then a lot of times we see the buyers and the bids still trying to hold it up. So if you want to see some sort of, let's say, a little mini proof of this, some of you guys watch CNBC. Go back at CNBC and obviously watch CNBC at your own risk. And look at how many people will continue to pump, like say Apple or Google and all Teslas, yada yada yada, Disney, whatever. Great buys. Now based on their PE and fundamentals and stuff like that, right? And they don't really really focus on the price and the volume action of the stocks. They don't talk about that much, right? They talk about the fundamental PE and all that. So these bargain buyers will cause the stock cause the stocks to rally 1, 2, 3, or even 4 times back up before the bullishness that was once so strong in the stock finally dies out, and so that's when you want to see the bears coming in and mauling it. All right. That will finally go down in earnest, and it's also at that point that a short should be initiated. Does that make sense? So after a stock breaks down for the first time, you start looking for signs that it may be shortable. So what I look for is, in the beginning, how I started was I look for stock rallies and where the rally takes it. I pay attention to the, in the beginning, I was focusing on the 50-day moving average and the volume of the rally, as well as how overbought the stock was on the RSI. The RSI was a very easy one because I'll know when a stock is overbought or oversold, right? Based on the 20 oversold territory and then the 80 or more over territory. So even actually 70 is considered overbought by the way. But usually with penny stocks, we usually see it going up because of the lower the flow, the stocks does tend to take it up even further towards the 80. So I like to update it towards more on the 80 RSI. So naturally, though, the general rule of thumb is over and the higher on the RSI. So anyways, as a stock comes back near its 50-day moving average, right, I will look at how much volume there was on its rally compared to the first breakdown. Okay, and then I also like to use, obviously the indicator, just like as you like to use it on the way up, negative divergences in the stock as it approaches the 50-day moving average. So VWAP is a good one. VWAP is a very nice little, indicator that a lot of shorts like to short at. Okay, so that's why a lot of times when you see a stock being below the VWAP or once the VWAP cracks, it's just bad because the shorts are taking over. Okay, so I like to use those indicators, and then I will start a position when it's very close to the 50-day or when it gets just over it, right? So, and that's going to allow me to have a close stop loss point if it does continue to rally. And then what I can do is I can add more if the stock does move lower, right? And it's impossible to tell what rally will be the final one. So there's a little bit of anticipation involved, right? But I think as long as you guys are setting up that trading plan and setting a stop loss point, just like I showed you guys on OXBR, right? Then you'll be fine. That's the whole point, the whole idea. You need to have some sort of trading plan that involves a stop loss and knowing that this is the risk that you're looking to risk. Because you want it to have a relatively low risk, right? The OXBR relatively was a low risk play. So you also have to pay attention to the general market, understand the general market, what the general market is doing, and where is it at? What's going on right now, right? If it has also rallied, kind of bearishly or weakly for several days, then you may be approaching a point to add some shorts, right? You may be getting some ideas that this is a bearish time to be getting more What have we seen so far since August? For the past few days, we've been seeing some weaker action. So that means that the more people are going to start understanding, oh, we're going to have to start shorting more. And that's why we've been seeing more stocks going on some fake outs, people shorting on these areas. And right now, it's sort of like we're in a bearish. That's why I'm over this lesson, because it's a slower times right now, a little bit redder days. And I think it's very important for you guys to understand and start looking into shorting. I think this is a great time. So just pay attention to the general market and all that, and then I will probably try to take at least some profits around 10%. Starting off as a new, short position. Try to aim for around 10% because of the way bear markets rally quickly. Okay, you don't want to be, holding overnight, trying to aim for that 30%. This isn't like a swing trade that, like on going long. There's a big risk with going overnight short. I don't do overnight shorting. Okay, I don't do that much. So if you're trying to overnight short, you are looking to really seriously. I mean, you don't know what happens. The next day it gaps up and you're waking up to a freaking $8,000 loss or something seriously huge, and you're not going to start off the day very nicely, right? So, have about and then look to cover and then look for a rally to get short again, or look for stocks that are looking to crack down, break down, and all that, right? Try to learn as much as you can as you practice on your paper trading account, gain more experience on that side of it, and hopefully some of the things I kind of talk to you guys about, you will apply it and will kind of improve over time, because just the more you just be consistent at it, you just keep practicing. How can you not get any better? Do you guys believe that the more you guys attend on these live sessions, the more you guys, even if you guys don't trade, by just attending, listening in, and watching, you guys do know that your EXP is gaining, right? It's just all about showing up, right? At the end of the day, it all ends up with who shows up or who doesn't. It's just like in business, in any kind of work. Show up or you're not going to show up. And the people that always shows up consistently are the winners, okay? So don't worry about, man, I need to make money, and if the day looks slow, I guess there's no potential to make money, so I'm just going to skip out on that day. Don't have that kind of mentality. Don't have the mentality where August is going to be slow, so I'm just going to skip out on it and not trade for the whole month. And then I'll just, trade with you guys back then. And the next thing you know, you do worse because what have you been doing the past month? You just took a whole break, right? And again, I'm not saying it's not important to take a break if you guys are like overwhelmed or you guys are, are on a losing streak. Sometimes you do need that little healthy, mini. Okay, I need to recoup myself, because a lot of times if you don't have that break, you're gonna get burnt out. And trading burnout is very, very real. You guys have to realize that. If you keep on going this losing streak, you don't know what you're doing. You just keep on gambling. You're on a burning breakdown. You're going to get on that cycle over and over again until you got nothing left. You got real burnt out. So it's not saying that you should take a break, but what I'm saying is if you can't come in here, get on your demo accounts, simulation accounts, practice daily. That is your duty. As a trader, if you're committed to this, you got to be here daily, practicing in and out, taking notes. What did I do right? What did I do wrong? It's a serious business. In business, do you just take off, when is this an important time for you to take off your business? You just suddenly just take a break? Cookie cutters, we don't do that, right? So, certainly you will make mistakes, learn from them, okay? I'm not much of a shorter. I do love shorting though, and right now this is a great time. That's why I'm going over this right now with you guys. And you will learn and gain more experience as you guys keep on practicing. Okay, so we can see a bear market, probably happening here in the next, I think that's what it is. Obviously there's lots of opportunities to shorting. So watch for these. Ready to bounce them when a weak stock gets near its 50-day moving average, or the stock hits the VWAP, or the stock goes on a crack of the uptrend. Those are some 3 ways for you guys to just basically look for an opportunity to short. Hopefully this helped. We are 5 minutes shy away from hitting 11:40. Did this help to you guys a little bit or not? Did this make sense? I'll try to you guys in the DM a little bit more better. If you guys have any specific questions, feel free to reach out. But I think that's kind of like the basics. Again, if you want to read a book on that, go ahead and purchase one, or go to the Google document that we have on our education channel and start reading by Willie O'Neill's, how to short selling stocks, how to short stocks. Okay, so that's where. And also, if you guys have a better book that you already started, or you guys have a personal book that you really liked, that you personally started with, please feel free to share on our trading chat so that traders could start reading that. But I would start with that book. That's just me, basically, where I started off from, and then the rest were just watch YouTube and whatnot. But other than that, that's about it. Okay. And then, as you guys start understanding the concept more and more and start practicing, I'll probably go into more of these a little bit slightly more advanced shorting areas and what to look for. But I think today we should just end it here. Okay.
DMPI. Ovid.
All right.
ICAD. Link. Bot.
Cool. Yeah, no problem. No problem. I'm glad you guys were listening in and took that a little bit. Let's go down to obviously this micro penny OXDRW. It really isn't my thing, so I'm not going to be really getting into that. Kelly B, again, is another 5 ticker symbol stocks like this. Like, we're just not going to do it. By the way, what happened to EYEN, guys? It just crashed because it failed. So make sure this is also important. If you see a stock not being able to break, and just here right now what happened was the 50 EMA got rejected. So this is where you should have taken your mercy exit. Yes or no? Did this make sense? When you did see a 525 break and it was in play and it was starting to make only lower highs, this time 525, 525, failing to break, and now finally this triangle cracked, and so does EYEN now goes down. So it's a tough day, tough crowd for the bulls, as there's lots of bears just ready to maul it. So I wouldn't probably expect too much here right now, as we'll see. I mean, this could be something that could Kelly B. It's a very low float, under 100,000, 94,000 in float, and I think this stock is very, very, very dangerous. Very dangerous. Only 82,000 in volume traded, so I would probably not touch it. PFNX looks dirty. OXBR just still downtrending. Technically it hit the original target, but I marked it as a loss. It's got stopped out at 220. Still waiting for our PIX to come down. Else. Yep, I think, again, I would highly encourage you guys, if you guys didn't listen to my 3-day trading rule, I'll probably go into that tomorrow. The strategy that I use to help myself to not overtrade or to not go on this emotional breakdown, or like where you go blowing up your account more than you should. So it's the 3-day trading rule that I think I talked about. I'm not sure if it's recorded or uploaded to YouTube. I'm going to have to check with Trader McCrum. But I've been religiously following that rule. So that what the rule basically, just in a glimpse, is that if you go on a 3-day, or not 3-day, 3-trade loss, straight in a row, XPR, say you lost. You got in on EYEN, you lost. And then the third trade, say you got in on SYPR, okay, and then you lost. The rule is, for me, what I do is that means that, okay, I'm at 3 strikes and you're out. And I'm just closing the laptop or computer for the day. And I'm just going to review myself and then move on with my day, because I have days and too many times and an experience where I go 3 times in a loss roll, and what happens? The 4th one goes on a loss, 5th one goes on a loss, 6th, 7th, 8th, and then now what? You're down more than you should have been. You could have ended your day negative $300, but then you're now ending the day at negative $1,300. You just lost another $1,000, and I guess about you? No, of course not. Okay, so that just means, what that tells me though, honestly, means that, you know what, my plays, my strategies, it just ain't working out. I need to switch it out, but it was too late. So I'm like, you know what, it's just not my day. Not gonna change it. Not gonna Okay, I got other days to make it up for. Okay, it's the law of averages. You gotta understand that. There's no way you're gonna keep on. There's gonna be out of 20 trading days, you're gonna have a one day that you're gonna go losing streak on. Now, will you have a month or two where you can go on a winning streak? Of course you can. And then how much you studied and experienced and focused and all that. But you gotta not be surprised if you do end up taking a loss on the day, because again, this is a business. In business, you don't just profit and profit and profit and keep on increasing. There's gotta be a time or season, okay, at one point or another, where you're gonna be down on 1 month or two, right, in your business, right? Just like the restaurant business had on streak, something happens, goes down. Now what's up? What are you gonna do next? Right. Anyways, that's that, and then